Hi friends, today we're delving into a crucial question that has been in the minds of many investors. Why have Chinese stocks been doing so badly compared to practically anything else in the world of investing during the recent times? As we explore this topic, we'll touch upon key factors from economic shifts to regulatory changes, so let's get started. To understand the recent struggles of Chinese stocks, we need to start with the broader economic context. Over the last 5 years, China has faced a perfect storm of challenges, starting with Trump's trade wars through to COVID pandemic and its lockdowns, and finally to Xi Jinping taking stronger grip of the private sector companies than before, among other things. Now let's focus to a major player in the China is bad place to invest in narrative, the regulatory crackdowns. The Chinese government has implemented a series of tough measures, especially targeting the technology sector. These changes are aimed at addressing concerns such as data security, anti-competitive practices, and overall market stability. From increased scrutiny on tech giants like Alibaba to restrictions on online education platforms, these regulatory measures have sent ripples through the market, leading to a decline in investor confidence. Although, for example, in the case of education industry, one could say that the government intervention was right thing to do, and in the cases of tech sector, one shouldn't be surprised that government is heavily involved in shaping the operating landscape. Heavier than in the West for sure, but keep in mind that also in the West you see legislation like competition laws and such that shape the landscape. Just saying, this is not unique thing for China only. Adding a layer of complexity to the mix is the geopolitical landscape. Tensions between China and Taiwan have been a significant point of concern. The Chinese government has not only increased military activities around Taiwan, but has also made explicit threats, creating uncertainties that wave through global markets. The geopolitical tensions, especially the ongoing situation with Taiwan, contribute to the overall market uncertainties. Investors are keenly aware that geopolitical events can have profound effects on trade dynamics and market stability. Now let's talk about another crucial aspect that has impacted Chinese stocks, the ongoing chip wars. The United States has imposed restrictions on supplying crucial semiconductor chips to China. These restrictions aimed at safeguarding national security have had a cascading effect on various industries, including technology and manufacturing. The chip shortages have not only disrupted global supply chains, but have also hit Chinese tech companies, affecting their production capabilities and consequently their stock performance. As we examine these factors, the economic impact of the pandemic, regulatory crackdowns, geopolitical tensions, and the chip wars, it's crucial to highlight that the decline in the value of Chinese stocks is largely influenced by external events beyond the company's valuations and actions themselves, what the companies do. Investors need to recognize the interplay of global events on the stock market, understanding that these challenges are not isolated incidents but part of a larger interconnected economic landscape. These events that we have now gone through, the broader economic landscape and forecasts on it, regulatory crackdowns, Taiwan, chip wars, and increasing tensions and competition with USA have all played a role in the narrative that China is an impossible place to invest in. I have felt this in my Alibaba position that is badly on minus side, I believe minus 50% or something like that. So what are my thoughts on investing in China personally? Of course, no one can know what will happen in the future. Investing is always about risk and reward and thus probabilities. The risk with China is a total decoupling from the Western world that can happen if China chooses Russia's path and chooses violence with Taiwan. When talking purely about investing and the economy, this would have many times worse effects globally than Russia's cowardly attack on Ukraine. Loss of lives is something, of course, you cannot put a price tag on, but if you allow me to address China-Taiwan situation purely from investing point of view, Russia's actions would be really small compared to this. The world would change for many decades to follow, and there will be a huge number of companies whose businesses will go down really bad all over the world. And I mean all over the world. It doesn't, if the company has anything to do with China, whether it be sourcing of raw materials from China or Chinese people actually being their customers, the effects would be huge and it would touch a great number of companies in the United States, in Europe for sure. I think it would be the end of the world as we know it today, in my opinion, to be honest. But this is the worst scenario. I was wrong with Russia when I thought that business with the West, business with EU would be a force for peace and would prevent conflicts such as the one we are witnessing now. I owned Russian gas back in the days, took a minus 50% hit with my position in Gazprom, and I deserve it. I deserve to take that hit, but I have learned from it now. But I have to say, with China, I still believe the stakes are simply too high for them to attack Taiwan, providing that Taiwan takes care of their defense and makes it clear to China that they will not go down without a fight. I believe still that stakes are too high for China to choose Russia's path, and I hope that CCP leaders have more sense in them than the Russians. For sure, an attack on Taiwan would decrease the quality of life for Chinese middle class. China has so much more to give to the world, more than Russia, the gas station of the world, it has to give to the world. The world works its way away from the fossil fuels, only making life in Russia much harder in the future, when fossil fuels are not needed as much as now and in the past. It was easier for EU to cut ties with Russian fossil fuels than anyone expected. I am happy for that. China has lifted so many people up from poverty in the past, and there is no reason really why it wouldn't continue in this upward trajectory also in the future, as long as it does not choose the path of Russia. So to conclude what I am doing, I still have a big position in Alibaba. By the way, if you're interested what else is in my portfolio, go and check my latest portfolio video from my channel Arctic Money. But for the time being with Alibaba, I will keep my shares as they are. I'm not buying, I'm not selling any of my Alibaba stocks. I'm happy with the position size I have now. If China realizes that hostile actions and words do not serve the wellness and future outlook of Chinese people, and they seek, let's say, more normalized ties with the West than what the ties are right now, sentiment on Chinese stocks will improve too. It wouldn't be surprising for me if Alibaba would be 2x almost immediately. Due to bad sentiment, it is trading so much lower than what it would be trading if it was a company from any other part of the world. Future will tell what happens. Remember, everything I have said here are only my opinions, and you need to do your own research and your thinking here. I might get all of this totally wrong. If you think I am mistaken here, let me know in the comments below. If you agree with me, let me know in the comments below too. Subscribe to the channel to show support, and I see you in the next video. Bye bye.